G'day. Welcome, folks. Welcome back to another share update. Happy New Year to everyone. It's the 1st of January 2025. So this is a friend request for Woolworths Australia, the supermarket. We're having dinner last night, and his friend, we started talking about Woolworths and if it's worth investing in, saying how the price is dropping, but is it worth buying more? So I'm going to go through the technical analysis in terms of how to look for this share, but also any other shares, and apply the same methodology. So let's first look at a quick outlook. So as of today, Woolworths Group presents the following financial information. Market capitalisation approximately $37.19 billion in Aussie, reflecting a 16.68 decrease over the past year. Revenue growth, annual revenue of $67.92 billion, marking a 5.6 increase. Profitability, net income of 108 million Aussie dollars, resulting in a profit margin of 0.16. Valuation metrics, trailing PE ratio of 344 and forward PE ratio of 24, indicating a high valuation level. Debt position, total debt of 16.7 billion against cash holdings of 1.3 billion, leading to a net cash positive position of negative $15.4 billion. Dividend, pays an annual dividend of $1.49 per share, yielding 3.41% yield. Recent challenges facing legal scrutiny from the ACCC over alleged misleading discount practices which may impact future profitability. These factors suggest that while Woolworths maintains a strong market presence, it is currently experiencing profitability challenges and legal issues that could affect its financial outlook. Okay, so much for the fundamentals. So let's look at a technical outlook for Woolworths and see if it's worth investing in. So first we look at the monthly, the weekly and the daily charts. We look at all the time frame long-term trends. So if you're trading on the long term, I'd suggest you look at the monthly and the weekly primarily. Or if you're trading on the intraday or the daily or the intraday, you look at the daily and the weekly. That's why I'm showing you all three time frames. So here, for example, on the monthly, we've got these moving averages on both the price and also this indicator down here called the commodity channel index for those new to charting. And what we look at seeing is if the price and the CCI, the commodity channel index, is declining like it is here on the monthly, it's in a downtrend. So avoid buying on the weekly if you're buying long term, if the monthly is in a downtrend. And for those new to charting or to technical analysis, to learn how to draw these moving averages on both the CCI and the price, there's a video in the description below to follow that after this video if you want to learn how to do that. So again, longer term, I'd avoid buying it at the moment until this started breaking higher. Now, what we do, you'll notice back here, it broke high on the monthly, and that was around March 2023, which coincided with this period back here. Now you'll notice here on the weekly, so just bear that in mind. I'll just expand this chart in a minute, but just bear that in mind. In March 2023 on the monthly, it broke above on the CCI and the price. So how do you trade that on the weekly? So back here in March 2023, you can see there it was a fresh breakout above the price, but also above this commodity channel index. So whenever you see that happen there, you would have bought it on that candle. And if we drew a measurement tool, and you would have exited, if you're buying long term, you would have exited on that candle up there, assuming you buy and sell on the close of the day. And you sell it when the CCI breaks into this moving average range like it did there. And that would have given you just almost a 9% gain in 16 weeks. So that would have been a nice little gain in 16 weeks. And what I've got back here as well is I've got these divergence. And what that divergence means with the CCI and the price, let me just delete this to make it a bit cleaner. You can see there this CCI is hitting this trend line twice. It's a double bottom, we call it. And that's almost slightly, that is almost slightly higher than that point there. Whereas the price lows are declining. That's called a bullish divergence. And what it does is, and I've drawn this rectangle. Let me get rid of this price gain. This is a minimum target retrace. So what it does, we expect the price to retrace to that level as a minimum. And the way we measure that is we draw a Fibonacci from that low. We take it back to the significant high, which is that area there before that divergence started. And that's at 38% retrace level. That's a minimum. And more than 90% of the time it hits this range. Now in this case the price rose just above that 61%, and that 61% is key. If it breaks a lot higher than that, we expect the price to reverse. In this case it broke just above it, then it bounced back down again. So that's on the weekly. And the bigger time frame we show, or the smaller time frame we show, we see a lot more of these divergences happening. I'll just delete that, make it a bit cleaner. We didn't have any more divergence. We had a bearish divergence back here on the monthly. So if you're holding Woolworths stock back here and you saw this bearish divergence, let me just expand that. You can see there lower highs on the CCI was declining versus an equal top on the price. And since then, the CCI and the price started declining. So if you're holding Woolworths stock back during this period, and you're fortunate enough, and you started seeing these declining CCIs, then versus the price, then you'd probably be wise to get out of your. It gave you plenty of opportunity, plenty of months here to get out of your stock and take your profits. And by the way, that would have been a nice little gain had you got in on that break above there and break above there. And you could have got in and out a few times there when it broke below the CCI, held it, or got out when it started breaking down again there. So that's on the monthly. The weekly showing a bullish divergence back there, none since. The CCI generally tracks in line with the price. And back here on the daily, we had a lot more bullish and bearish divergence. So you can see there we had a bullish divergence here, broke above, and currently just kissing its that 23% target. If we drew a Fibonacci from there to there, that's at 23.38% retrace. There was another Fibonacci retrace there, 23.38% retrace. This one went as high as, broke higher than that 61%, didn't have a full reversal, hit this resistance at 36.56, then broke back down. Now you'll notice here it's starting to weaken. The prices, the CCI is starting to drop, and that CCI is in a downtrend. So you'd like to see this break higher like it was back here. The CCI breaks higher above the moving averages. This one's breaking higher, but the CCI is in a bit of a downtrend. Likewise, the price is weakening. You can see the moving averages getting narrow. That's a weakening sign. So the other thing to look at as well is always reference the higher time frame. So during that period there, you can see there the CCI is pulling back. Both the price is declining, but also the CCI is declining, pulling back towards that moving average. And that's where you want to be careful about buying any stock. So where are we today? Okay, the weekly is breaking through that moving average range, about to have a fresh breakout possibly in the coming week. But notice the price is still well below this moving average range on the weekly. And on the daily, we've got this move higher. Until that point there, you'll see there, broke higher at that point above the moving averages. Now what I've got here is getting more technical for those not too technically minded, but for those that are, we've got a bullish divergence. And what that means is the CCI down here is showing a pretty flat, even over a very slight bullish move, a very slight move to the upside. If I drew a trend line between that low and that low, that's slightly higher. Whereas on the price, it's dropping. That's called a bullish divergence. And I've drawn a target area here. And what that means is Fibonacci, for those familiar with the Fibonacci, we draw a Fibonacci from that low to that high. And you can see there, that's the target range. Now that's actually just kissed that minimum range of 23.38%. That's a minimum. And more than 90% of the time, it hits this minimum range. I'll go through back in a minute to show you some other divergence and what they've accomplished. But that is the minimum it can hit. So this could actually keep declining. You'll see here the CCI is still narrow, still slightly dropping, and so is the price. So I wouldn't be going long yet. I'd like to see it break a lot higher than this 23% to be more bullish and buy the stock. Now that's assuming this keeps rising on the weekly as well. But notice back here, I've got it on the bigger time frames. It doesn't happen as often. The smaller time frames it does. You'll notice back here on the weekly, is where you got to look out for these divergence. We've got a double bottom here on these lows, low there and a low there. They're pretty much, it's a double bottom. They're both equal on that trend line, versus lower bottoms on the price. And what it's done, it's bounced from there. Let's see what this one did. So if we drew a Fibonacci from that low to that, you can see there it hit that 23% very easily. At 23.38%, it broke through that level and went as high as around the 61%, which is always a key area. And if it breaks much higher than that 61%, we're going to see a reversal in the price. In this case, this is the weekly chart. In this case, it hit that 61%, just above it, and then it fell off again. So what I'm saying is, with these retraces on this divergence, that is a minimum. More than 90% of the time it hits this minimum. Doesn't mean it's going to be a full-scale reversal. So that's the weekly. On the daily, remember I said it happens more often on the smaller time frames. Let me just get rid of these rulers. So we had a small bullish divergence there. It's already just kissed it there. Here we had another bullish divergence. Higher lows on the CCI versus lower lows on the price. Let's draw Fibonacci from that to there. You can see there it broke well past the 38% level. It's close enough. Broke through it. This one went higher than the 61% and hit this resistance up there at 36.56, and it bounced back down. So we don't know where it's going to stop. I can't tell you exactly where it's going to stop, but that's a minimum retrace. We had another bullish divergence here. Lower lows. If I draw a Fibonacci between that, Fibonacci between that, and you take back to the recent high before that divergence started. You can see there again it broke through quite easily, and that one went around the 50% level before retracing back down. That's why you've got to look at the bigger time frame trend and see how it's trending, and this one is still trending in a downtrend. If you look at the weekly, this is the daily, and you want to consider that. Now, I don't trade these divergence. I look at these potentially as an area to get in or out. So here, for example, we've got a bearish divergence. Let me just delete that Fibonacci. We've got lower highs on the CCI versus higher highs on the price, and in this one we expect it to drop at least. Let's take it back to that low. Doesn't really matter if you take it to that low or that low. You can see there it actually broke well below the 38% level. Even if I take it to that low, that's the 23 roughly there to there. That's the 38% minimum retrace. This one went well below and broke below the 61%, bounced, and then it had this bullish divergence, and it bounced, and so on. So that's how you read these, and I won't go through too on, but you get the idea. There was another bullish divergence here, and if we took this back to, let's take it back to even to that one, you can see we're well past the 23%, still well past the 23%, and that one well past the 23.38, and this one bounced perfectly off that 61%, and it bounced back down again. So that's how you read these divergences. That's on the daily. Now on the intraday, even if you're trading on the daily, for those technically minded, we still look at the intraday, and that's still got a lot more bullish and bearish divergence. You can see there we had a bullish divergence there at a small bounce. Let's see what that hit. If you take it back to that level, it hit the 23%. Even if I take it to that level, it just kissed the 23% before bouncing back down. That's what I mean. You can't really tell how far it's going to go up or down on these divergences. This one just touched it, and it broke very strongly down. Had another bullish divergence here versus the price. You take it back to that recent high, and that broke through the 23, and it's currently hovering around the prices between the 38% level. So in summary, where are we? If I go back to for those not technically minded, if I go back to the monthly, weekly, daily charts, I would suggest I'd like to see this break higher on the weekly above the CCI, and I'd like to see this break probably above these moving averages on the weekly as well to be more bullish. If you're going to trade long term, I'd probably wait for this to break higher on the monthly if you're trading long term, if you're not worried about the smaller daily trends. If you want to take small daily trends like I do, then you look at the daily and also the hourly and look for any of these divergences and find out if you're seeing any potential weakness in price. So long-term trading, I'd wait for this to break higher on the monthly and also show that on the weekly. Daily traders can look at it on the smaller time frame, look at it on the daily, but also wait for this to break higher on the weekly, and then take small trades like I demonstrated.
To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.